Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 26th, 2025, and we're diving into Nutanix's first quarter fiscal 2026 earnings report. Nutanix, a leader in hybrid multi-cloud computing, has just released their latest financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Nutanix has shown some interesting developments this quarter, and I'm excited to break it down for our viewers.
Revenue and profitability overview. Let's start with the top line. Nutanix reported a revenue of $670.6 million for Q1 fiscal 2026, marking a 13% increase year over year. John, what are your thoughts on this revenue growth?
The revenue growth is quite robust, driven by strong demand for Nutanix's cloud platform. The company has managed to increase its gross margins as well, with GAAP gross margin at 87% and non-GAAP at 88%. This indicates effective cost management and operational efficiency.
That's impressive. How does this align with their strategic initiatives?
It aligns well. Nutanix's focus on expanding partnerships, like those with Dell and Microsoft, is paying off. These collaborations are enhancing their platform's capabilities and broadening their market reach.
EPS and analyst expectations. Now let's talk about earnings per share. Nutanix reported an adjusted EPS of 41 cents, significantly beating the forecasted 12 cents from 12 analysts. John, what does this tell us?
This is a substantial beat. The adjusted EPS of 41s reflects Nutanix's strong operational performance and cost management. It shows that the company is not only growing its top line, but also improving its bottom line, which is a positive sign for investors.
What factors contributed to this EPS outperformance?
The key contributors were higher than expected bookings and solid free cash flow performance. Nutanix's ability to manage expenses and optimize its operations played a crucial role in achieving this result.
Operational efficiencies and future outlook. John, let's discuss Nutanix's operational efficiencies and future outlook. They reported a free cash flow of $174.5 million and an 18% year-over-year growth in annual recurring revenue. What does this indicate?
These figures highlight Nutanix's strong cash generation capabilities and the growing demand for their subscription services. The ARR growth is particularly encouraging as it reflects the company's success in acquiring and retaining customers.
And what about their future outlook?
Nutanix has provided a positive outlook with Q2 revenue guidance between $705 and $715 million and full-year revenue guidance of $2.82 to $2.86 billion. This suggests confidence in their business fundamentals and market position.
Leadership statements and strategic initiatives. Let's touch on the leadership's perspective. CEO Rajiv Ramaswami and CFO Rukmini Sivaraman have shared their insights. What are the key takeaways from their statements?
CEO Rajiv Ramaswamy emphasized the solid demand for their cloud platform and the strategic partnerships with Dell and Microsoft, which are crucial for their growth. CFO Rukmini Sivaraman highlighted the revenue shift and the raised free cash flow guidance, indicating a strong financial position.
And what about their strategic initiatives?
Nutanix is expanding its support for Dell PowerStore and Microsoft Azure Virtual Desktop, which will enhance their product offerings. Additionally, the addition of Greg Lavender to the board brings valuable industry expertise.